Analysis of free cash flow of the firm, FCFF. The concept of free cash flow is very important for financial analysts because it represents the extra cash a company can generate from its business and available for investment and for rewarding its cash investors. FCFF is a very important concept for financial analysts. FCFF shows ability of a company to pay for its investors. It is the excess operating cash flow over the investment amount needed by the company. Important term is the word free. Free means here free from the operations of the company, free from the investment requirements of the company. So FCFF shows ability of a company to pay its investors. And the value of the firm, the value of the company to its investors very much depends on the ability of the firm to pay its investors. FCFF equals to operating cash flow minus the investing cash flow. Now to calculate, again, we need the data from the statement of cash flow. We have to take the operating cash flow amount, investment amount, deduct, and see the result. Now for 2023, the company's free cash flow was a negative number. It is negative because the total amount of investment amount or investing cash flow is larger than the total amount of operating cash flow. Now, for example, we want to calculate the FCFF of this company, PCP, for the year 2023. The data comes from the statement of cash flow. For the year 2023, OCF or operating cash flow was equal to 45 billion. You look at the second section, investing section, ICF total amount of 72 billion. The total amount invested in the assets of the company, 72 billion, was larger than the operating cash flow. So we get a negative free cash flow, meaning the company needs to use external funding to cover the investment amount. So we determine the FCFF of PCP for 2 consecutive years, 2022 and 2023. Now FCFF equals to operating cash flow, OCF, minus investing cash flow, ICF. So we look at the statement of cash flow. That's where we source the data from. Operating cash flow, 45 billion for the year 2023, 2022, 19 billion. Now we take the investment amount from the investing section of the statement of cash flow, 72 billion for the year, negative 72 billion for the year 2023, and 962 million for the year 2022. You take the difference, and we find out that the FCFF of this company for the year 2022 was positive number, meaning the company's operating cash flow was larger than the investment amount. So the company had excess cash that can be paid to the owners of the company or maybe use it for debt repayment. Whereas in 2023, the company had negative FCFF, meaning the investment amount was huge, much larger than the operating cash flow. So the company had to borrow money to cover the investment shortfall, or it had to issue new shares or use its cash balance. So negative free cash flow means the company is in cash deficit. It has to use external financing by way of borrowing money or issuing shares, or maybe lowering or cutting its dividend amount or using its cash balance. So the concept of free cash flow indicates the company's ability to generate money for the investors, and that will ultimately determine the value of a company for its shareholders.